Figuring out all the steps needed to start investing can seem really complicated. You might have heard of people becoming overnight millionaires from putting their money into companies like Apple and Tesla. You might want to get in on some of these profits, but you're not sure where to begin. Thankfully, investing is really straightforward and easy. Anyone can get started with it, no matter how little experience you have. It's not time consuming, you don't have to spend hours looking at stock charts or have thousands of dollars saved up to begin. I'll be showing you everything there is to know, and this is the only video that you need to take you from investing beginner to investing pro. I'll even show you how to make $100 a day of passive income using a dividend stock, and show you how to get zero fees using one special brokerage platform. Firstly, picking the right broker. This is basically just a place where you can buy and sell your shares and keep the money that you have from your investments. A lot of them offer apps, and they all have an online website that you can access using an internet connection. The main ones in New Zealand are Sharesies, Hatch, Stake, and even some banks like ASB offer investing too. The two things that I keep in mind for figuring out which broker is going to be the right one is the fees that it charges and the companies it lets you invest in. So Hatch and Stake only let you invest in the American market, whereas Sharesies lets you invest in the Australian, New Zealand and American market, and ASB is okay for New Zealand stocks in terms of its fees, but do not use them for investing into the US market. They charge $90 as a flat base fee, so if you're investing $100 with them, you're going to pay $90 in fees, and mate, that is outrageous. Steer clear of them for the US stocks. When 91 petrol was over $3 a litre, you don't have that kind of money to be spending on brokerage fees. You might say that Sharesies is the clear winner out of all of these, but it does depend if you want to branch out and invest outside of the American market. I personally mainly invest into the US market since the companies tend to grow a little bit faster than the New Zealand ones. If you take a look at Fisher & Paykel, which is the third biggest New Zealand company based on its total market cap or its total value, and compare it to Apple, which is the biggest company in the US market at $2.7 trillion, so it's over 200 times the size of Fisher & Paykel. And taking a look at its average share price increase over 5 years, Apple has gone up almost 270%, whereas Fisher & Paykel has only gone up 77%. So basically over triple the return from Apple over those 5 years, and this is definitely just one example. It doesn't always pan out like this, but it is fairly common that the US stocks will beat out the New Zealand ones. But at the end of the day, it's all personal preference, but I personally just do most of my investing into the US market. Secondly, jumping into fees, there's not a huge difference for US stocks. If you're looking between all the New Zealand brokers, there might be a few dollars cheaper here and there. If you're looking at how much you pay for investing $500 or $1,000, it's about $1.50 to $2 cheaper using Hatch, so that's why I personally go with them. But again, it's just personal preference. There's not going to be a massive difference unless you invest with ASB securities, where you're going to be charged an arm and a leg with a flat base fee of $90 per investment, no matter how much you're putting in. Even if you invest $5, ASB is still going to charge you $90 just to do that. So I wouldn't use them for any American companies. In comparison to New Zealand shares, ASB is a lot better. It's more competitive with Sharesies, but personally I still think that Sharesies is better. It does have the app, it's easier to navigate, it's a bit more user friendly than using ASB, and those are really the only two where you can invest in the New Zealand market, so you don't really have too much choice in that regard. I've got an affiliate link for all three of the platforms, Sharesies, Hatch and Stake. If you want to get some free money when you first sign up, check out the referral links down below in the description box. The second point is how much should you be investing and what's the best strategy. So when I first started, I always thought that I was going to try and buy a company at the absolute bottom and then sell it at its peak value and just make all the money in the world. I was going to look at Tesla stock, look at its 5-year average return, perfectly time my buying and selling points at the bottom and the top of the market, and make thousands of dollars. Now that really doesn't normally work out, and it's not going to be the most viable and reproducible strategy when it comes to making money in the stock market. One of the easiest things is if you just dollar cost average or put a consistent amount of money every day or every week into one business and hold it for the long term, say 5, 10, 20, 30 years, then you'll get a nice compounding effect when your money continually grows over time. There are two main types of investing. So the first one I talked about was active investing, where you're looking at stock charts, you're doing lots of research, looking at financial reports, trying to really get a good understanding of one company, and you're betting all your money on that particular business. This isn't the easiest thing to do. Even fund managers who are paid hundreds of thousands or millions of dollars a year to do this typically don't beat the market, which has an average return of about 10%. Now, if they can't do it, I wouldn't say that if you're a beginner or even an intermediate investor that it's really worthwhile doing this. Instead, I prefer to go with passive investing, where you just have a set amount of money you're putting in every week or every month into one business, normally an index fund or an ETF, where your money is going to be spread out amongst hundreds of different companies, so you're not just at the mercy of one particular business. One of my favorite investments is a dividend stock called SCHD, or the Schwab US Dividend ETF. Now, using this stock, you can actually make $100 per day from it in passive income, purely from the dividend payout. Now, it does take a bit of time to get there, but if you put in $84 a week for 25 years into SCHD, which has an average return of 12% and a dividend payment of 3.5%, after all that time, you'll have a portfolio valued at just over $1 million, and the annual dividend payment is going to be $35,721, which is going to equate to virtually $100 per day. The best way to think about your investments is as a secondary savings account. You're not trying to always jump between different companies and find the new hot stock to buy. And the third and final point is how you actually buy shares of a company using a brokerage platform. So for this example, I'm going to use Sharesies since it's the most accessible and the most widely used broker. They're all virtually set up exactly the same way. So if you know how to use one, you know how to use them all. So when you jump onto Sharesies, this is what the home screen will look like. It's going to give you a rundown of your portfolio, and then you can search for what companies do you want to be investing in. So just click on the Explore tab, or that little search icon there, and then we'll pick a nice general company that everyone's familiar with. So we'll go with Apple. So you can just type in what stock you are wanting to invest in. So just click on it up here, and then Apple shows up straight away because I've got my investments sorted by market cap, or the size of the company. And there's a lot of other different options you can do, like the dividend amount or the highest annual average return for a business. So I'll just stick with the market cap for organization, and if Apple wasn't at the top, I could just type it in and then search for it here. So there we have Apple. I'll click on it, and then it's going to give me a bit of financial information about that company. So the total share price that it has, which is at the moment $175 US, and then it'll show me the price changes for that company, looking at 1 month, 3 months, or 1 year, or 5 years as well, just to give me a breakdown of how that stock has been performing across all those different time points. It'll show me some more info, like its dividend yield of 0.53%, its P ratio, and then the market cap down the bottom. So just a bit of general information about the company, and then we just want to click on buy, and then it's going to provide some different buying options. So the main one that I go with is market buy. You're just buying the shares of the company at the set market price. So for Apple, that would be that $175 US. And again, remember, you don't have to buy a whole share of a company. You can buy fractional shares. You could put in just $10 if you wanted and just buy a small piece of Apple. You don't have to think that you have to buy an entire share, because $175 US for one share of Apple was over, or basically close to 300 New Zealand dollars. And if you're just starting, that's a pretty big jump, and a lot of people aren't going to be keen on doing that. So again, just start with $10 if you want. That's completely fine. So just click on market buy, then go next, put in the amount that you want to invest. So I could just put in $10 if I wanted, and then you just click on review, and then the shares will be purchased for you. And that's basically all there is to it in terms of buying shares on Sharesies or any broker. It's all the same kind of process. It's not a big difference between them. So that's really all there is to it when it comes to buying shares. Again, all brokers are pretty much the same. If you know how to use one, you can use all of them. But it's real important to know some of the other key features that come with a brokerage platform. Now, that's only for the basics of buying shares of a company. Sharesies does have some other unique features like a high interest savings account of 4.6%. It also lets you take full control of your KiwiSaver and invest in ETFs and other New Zealand companies, and it also helps you reduce the fees that you have to pay for your investing taxes. If you want to check out all of that and more, make sure to click on this video on screen. That'll give you a complete breakdown of the Sharesies platform.